and then obviously whatever monies are left over in that reserve account. The good news is that when interest rates were as low as they were in 2020 and 21,
rates are at a 23-year high.
If $25 is going to make or break you.
Hey, so we are here today with Nick, Lucia, our preferred lender, Fairway Mortgage, Lucia Lending. And as you know, my name is Jason, founder of Turn the Key Real Estate. And if you haven't already, please like, subscribe, save this. This is some important information that you're probably going to want to come back to, and maybe even share it with somebody who is interested in learning more about what's going on in today's real estate market. So, Nick, my agents and I, when we're talking to prospective buyers, the biggest concern right now is, should we wait to buy? You know, rates are at a 23-year high. Why wouldn't we want to wait until rates come down?
So obviously, yes, we're getting a lot of that from a lot of our clients right now. And you know, there's a lot of pressure on affordability, right? I mean, home prices have increased drastically over the last couple of years because interest rates were so low during COVID. And now that interest rates have been increased by the feds to help cool inflation, obviously that puts even more pressure on affordability, right? Because we got the higher prices and now the higher interest rates that we haven't seen in over 23 years. So the good news is that when interest rates were as low as they were in 2020 and 21, part of 22, is that there's only really one direction that they will go, and that's up. Yep. Not to mention with all the money that was pumped into the economy from the stimulus packages and the packages for the businesses, all of the above, that obviously hurts inflation as well too. So that's why we saw inflation get as high as it is, or was. Now that we're seeing, you know, inflation come down, you know, there's signs in the market that mortgage interest rates will also come down. But the difference between waiting, from what I've calculated out, when you from right prices today, more or less, you're looking at let's just say $500,000 purchase price. When interest rates are in the 5.25% to 5.5% range, you have to understand and you have to remember that home prices will start to increase, right?
Yeah.
So let's just use 15% increase, right?
Yeah, that makes sense.
That house that was for $500,000 today is now $575,000. And okay, yes, interest rates are lower, but the difference in payment is literally like $20 to $25 difference in payment, one way or another, right? So if $25 is going to make or break you, $25 higher or $25 lower is going to make you and break you today, then obviously today is not the best time to buy. But there's a lot of pent-up demand for buyers right now. All of the buyers in 2022 that kind of pumped the brakes when the Fed started increasing the interest rates artificially to cool the inflation, they're of course going to jump back into the market. We have a shortage of inventory. That's not going to get fixed overnight. It's going to take a handful of years for that to, for more inventory to come on the market. But the bottom line is that the difference in payment from where interest rates are today versus where interest rates will be in the future, we're only talking $25 difference because of the increase in prices again, because of the interest rates going down, prices going up.
Okay. Not
to mention, there are ways that we can structure loans to give you that future lower interest rate for the first year and then a step up. It's a 30-year fixed rate program. I'm sure everybody's heard about them because everybody's been talking about it, but it's the 2-1 buydowns or the 3-2-1 buydown programs that are out there, which are phenomenal programs that pay dividends twice, help you with the lower payment today, and then obviously whatever monies are left over in that reserve account, the 3-2-1 buydown or the 2-1 buydown reserve account, is future money that you could use potentially on the refinance for paying down the principal balance or covering closing costs.
And while also not having to pay that premium price a year down the road, 2 years down the road, because of that demand. So best of both worlds, right?
Yep. And you obviously have a lower tax rate as well too at $500,000 versus $570, $550, $575, whatever that may look like in the future.
Okay. So what would you say to somebody that just maybe has some questions?
I mean, hey, at the end of the day, I always encourage clients to ask questions. If you stick your head in the sand and you don't ask questions, then you're never going to know. And you very well could qualify today or take advantage of some of these different programs that are out there for helping with getting payments in line. And if it works, great, let's get you into a home today. You'll always have that light at the end of the tunnel to be able to refinance to lower interest rates in the future.
Makes sense. Like that famous guy always said, G.I. Joe, I think is his name.
Yeah.
Knowing's half the battle.
got to get tough, yo Joe.
That is definitely a dated reference there. But anyways, thanks guys for watching. If you have any questions, you want to connect with either of us, just drop a comment below. We'd be happy to help you. And again, if you haven't already, please like, subscribe, do all of that great stuff, and chat soon. Thanks. Bye-bye.